Good afternoon, everyone. It's good to be back. This is Trader Tim from eMiniMind bringing you a Monday market analysis video. Spent the last 2 weeks or so taking a little rest and relaxation break following the Traders Expo in Chicago. For those that were there, it was a really great time. Always fun to be able to meet followers of the eMiniMind blog in person, and a lot of great speakers and presentations that you're able to sit in on throughout the whole expo. So it was a great time. Also, opportunity for me to kind of take a little summer break from trading, and always good to get a little bit of a recharge in the mix. So, lots to talk about now as we kick off this week. I've got the all-time high marked above us here, 28.75 and a quarter on the ES, on the daily chart here. So you can see how we topped out right at the negative 23% target of this daily 50% that we'd been in. And so seeing the retracement or the pullback that we've had yesterday, Friday, and today, not surprising at all. I'm not a huge fan of trying to grab various anchor points on the way down. What I prefer to do is just come all the way halfway back, grab the low that's nearest to the prior 50% long here, and pull that to highs, and use that as sort of the next stopping point, 27.7150, and then that target puts us beyond the all-time highs. So, whenever I see a pullback like this at a negative 23, doesn't really throw a lot of concern into the mix. The market is looking very healthy in the way that it's making its run up. We didn't just go straight up. We've had these pullbacks, these consolidations, sideways movement along the way. That gives us a lot of support to be able to then rest on as we come down. So, not really getting overly bearish at this point. When we get a candle that looks like this, where the body encompasses the prior, or in this case, two candles prior, high and low, that's a pretty solid bearish signal. And so even though, the market is relatively strong, it's okay to take shorts as we head down into the next long. And so, always being aware of the trend, it doesn't necessarily mean that you can only trade in the direction of the daily trend. There's a lot of times where intraday I'm trading shorts and the daily trend is long. But, look at the context of where are we at in the trend. So, for example, a gap up down here at the bottom of the uptrend has a lot more weight than a gap up at a negative 23% target. A big body candle to the upside at the end of a trend, or at the coming into a negative 23% target after a long run up has occurred, I'm not going to be looking to, buy that breakout. Whereas down here, we had a gap up, market pulled back to the 50%. We had a little bit of a gap up shortly thereafter. That was a great candle to buy above the high of and ride, the wave higher. So I'm always looking at where are we at in context of the trend. Are we close to the 50%? Is the trend just starting or resuming itself? Or are we at the negative 23 or closing in on it? And could the trend be in sort of a coming to an end or short-term reversal period? And that's where we're at right now. So always look at not just the trend itself, but where are we at in the trend? Zoom out and ask yourself, have we made 4, 5, 6 retracements in a row, or are we starting the new trend? Are we at the start, the first or second retracement compared to the fifth, sixth, or seventh? So as we continue this week, I'll be looking for the market to perhaps pull back a little bit further. Sometimes what happens is you'll get a little bit of a bounce. And if I were to draw then from highs to lows, sometimes the market bounces, trades short at the 50%, and as it runs down, the negative 23% target of the short lines up with the 50% retracement of the next long. So you end up with shorts taking profits at the long entry, and you get a really strong rally off of that level. So that's another thing that I look at. Where do the targets and the next 50% line up? The more areas that you have where the market is traded in the past, it will tend to, gravitate there once again. When the market is going straight up, that's when you'll see the market just come back straight back down. So good, healthy market, lots of actionable trading here in the ES as well as the NQ. Markets like crude oil, gold, the euro, the 6B, the 6E. Lots of great markets that are trading pretty well right now. I would be a little bit cautious here in the next couple of weeks. You've heard me say this before. The month of August can be a little bit screwy, and some funny things can happen in the markets. The markets, a lack of technical adherence is what I've seen in the last 10, 15 years. So just be cautious in the month of August, and as we get into Labor Day weekend, following the first weekend in September, expect really good trading to resume. So not too far from all-time highs, some good support below us, good trending in the markets, and a lot of stocks moving higher. So should be a good week. And if you have questions or if you want to find out more about the Traders Expo presentation, I'm going to be putting most of that onto the eminimine.com website right on the homepage there, and you can get the slides and everything that I was kind of talking about in my presentation. And if you have anything specific, feel free to shoot me an email, tim@eminimind.com. Happy to talk about any questions you have, or if you want to do a one-on-one mentoring, I'm happy to. I work with a small amount of traders individually, and I'm happy to talk about that as well. So I hope everyone has a great week. It's great to be back, and we will talk to you soon.